welcome. You're watching Business Today Television. I'm Sakshi, Batra, and this is the earnings special edition where our focus is going to be on the numbers of Syngene International. The fourth quarter revenue for the company from operations has declined 8% on a year-on-year basis to 917 crores, but the profit after tax has increased 6% to 189 crore rupees. Now, Syngene has also announced completion of the acquisition of the multimodal facility from Stelis Biopharma, adding 20,000 litres of installed biologics drug substance manufacturing capacity with the scope for further expansion on this one. Now, to understand more insights on the earnings and the outlook going forward, I'm now joined by the company's top management, Mr. Jonathan Hunt. Joins in, he's the Managing Director and the Chief Executive Officer of Syngene International Limited. Warm welcome to you, sir, on Business Today Television. Thanks a lot for joining us to discuss and to decode for us and our viewers the earnings fine print. Tell us, first of all, how did you on your own assess the Q4 earnings? Was it as per or below your expectations? And if you could also in the same breath elaborate on the reasons behind the 8% decline in the top line this time around, despite the increasing PAT.
Yeah, no, thank you. Pleasure to join you. A pretty good year overall, actually. I think the 9% top line for the full year, good growth, not quite as much as we were hoping for. We would have liked even more growth than that, and that's really the story of the fourth quarter. I was describing it earlier to a colleague. We hit a bit of a speed bump, but like any speed bump, you roll on through and you get back to growth for the year ahead. But the moving parts are the bit that's interesting. We serve really two client segments: major pharmaceutical and biopharmaceutical company, the sort of Fortune 500 mega caps, strong organization, balance sheet, strong profit. And then you've got a startup community, US biotech. And then you've got two very different stories playing out in the fourth quarter. But for the US biotech environment, they've had a tough year last year, refinancing their businesses. And for many of them, that's played out for us in the fourth quarter. We had some clients that just came to us. They hadn't managed to refinance, so that if they don't raise it, they can't spend it with us. So they were either delaying or cancelling some projects. And that really gave us, quite late in the fourth quarter, that speed bump that we hit. The more positive news is if you actually look at the capital raising in the fourth quarter, it was a really good bounce back quarter, 23 billion of funding raised in the US biotech segment. So what happens next is that money that was raised in the fourth quarter maybe takes 6 months to feed through into new expenditure, new demand at our end of that supply chain. So that's one of the reasons why we've given upgraded guidance for the year ahead, high single digits to low double digits revenue growth expectations for coming. Okay. And that's, you'll see that capital raise last quarter and is going on now in this quarter start to feed through into expenditure later. So that's the biotech bit. If you want, we talk a little bit about the mega cap segment, where it's really geopolitics and a structural review and a look at how much exposure those major companies have to China as a place where they get work done and where they get supply of, whether it's innovation or whether it's manufacturing. And I'm starting to see a much more structured shift out of China coming into the rest of the world. And of course, India is well positioned. And as the leading CDMO, CRO in India, I think we're well positioned as well.
Okay, so I'll delve down into the details. You did see an impact of the reduced demand for the research and development services within the US biotech space. So I wanted to understand, what was the quantified impact for this quarter, and going forward from here, do you really see signs of recovery here, and how long will the challenges really persist in this segment?
Yeah, super. I mean, I'll sort of reprise the comments I made earlier. 23 billion of new financing going into the US biotech market in the fourth quarter. I'd expect that to take certainly one, probably 2 quarters to go from a new fundraise to then deploying it and spending it. And that predicts for a step up in activity around the mid-year and beyond. So that's really the shape of the year. That then, if I look at the sort of operating sort of miss for us in the fourth quarter, that accounts for 2/3 of it. and maybe 1/3 of it then just comes from the usual technical operational things. When we're trying to deliver new science, trying to solve problems, sometimes it takes you a little bit longer than you expected. So about 1/3 of that is a flow over into this financial year.
Okay. Sir, also on the operational profitability front, that dipped this time versus last year, but margins have improved. So how did you manage to maintain the EBITDA margin despite the challenging business environment and outlook which you mentioned?
Sure. I mean, the two factors there, one of which is genuine operating improvements, people being more efficient, good cost control. The other bit, of course, is there's only really two certainties in life: death and taxation. And we got a tax rebate from the tax authorities, and that fed through into profit. I'm not going to predict that we have one of those every quarter, but it's a good thing now.
Okay, death and taxes are only realities, and we will have to see how you actually go around them and deal with them. But let's now talk about the more meaningful businesses which have been contributing manufacturing services. You've successfully concluded the acquisition of biologicals manufacturing facility from Stelis Biopharma in FY24. How significant is this acquisition for your long-term growth strategy, and how much and from when do we see meaningful contribution into the earnings flowing in?
Yeah, sure. So we've given guidance for upgraded revenue performance for the year ahead compared to last year. You have to adjust for the constant currency basis. So last year's constant currency growth was 6%. The guidance for the year ahead is high single digits to low double digits. And there's very little in there coming out of the Stelis acquisition. The work for Stelis for this year is bringing it up to our standards, turning it from the facility it was back into making it a biologics plant, and then it'll deliver growth for the year after that. So that guidance doesn't have a lot baked in for it, but we still have a lot of operational things to do. So good outlook for the year ahead.
Okay. Also, do tell us, sir, going forward, what strategic investments do you really plan to make in this current fiscal year, that is FY25, to strengthen your position in research, development, and even manufacturing services, sir, now?
Yeah, I think one of the themes you're seeing across the industry is just automation, digitization, application of things like AI technologies to drug discovery, application of automation and robotics. And that's where a fair amount of the capex is going in the year ahead. So we invested $55 million last year. I expect it to be a little bit more in the year ahead, more like 60 million US. Half of that will go into the research services. Some good, interesting investments in cell line development, biologics discovery capabilities, automation, robotics, digitization. Those are really the themes for the year ahead.
Also, so if you could expound upon, since you did talk about AI, you have the artificial intelligence driven programs like Syn AI TM. So how are you planning to leverage these for advancements in both of your life sciences as well as other sectors?
So we do a number of things with that. I mean, it's a data set. If you imagine, as a company, we work on so many different scientific programs for so many different clients that we have a very large data set that we can then get our algorithms to go back in and learn new things. And the rule in AI algorithms, the more you feed the algorithm, the smarter it gets, the faster it learns. So there's a symbiotic relationship there. We've got those technologies deployed within our business, and then every time we do science for our clients, we're also feeding the algorithm and making it smarter. It leads to better insights, better decisions.
Okay. Sir, since you did talk to us about the guidance that you're giving as far as the growth is concerned, high single digits or low double digits as well, operationally, where do you see growing going forward from here, both on the EBITDA and the margins front as well?
So EBITDA pretty much in line with our long-term norms, about 30%, plus or minus a percentage point around that. So good margin structure at the EBITDA level. A little bit less growth if you drop down to PAT. I think that'll be single-digit growth, and that reflects a little bit of a tax headwind that we have. Remember, a lot of our units historically are inside SEZ tax wrappers. They start to be time expired So we're just working the way through that. Very well understood by the capital markets and our investors. And then growth within the business. Talked a little bit about the bounce back that we're seeing in biotech funding. So I'd expect research services to do better in the year ahead. And then CDMO, the manufacturing bit of the business, it had a good year last year. More of the same. Perfect.
Okay. All right. Many thanks, Mr. Hunt, then for being with us on the show and decoding for us the earnings fine print and sharing with us your outlook as well going forward from here. All the very best for the upcoming quarters, and here's hoping that we can catch up again to really understand about how the business is really taking shape going forward. Many thanks, sir.
Thank you.
Thank you. With that, viewers, we wrap up this very special conversation with Mr. Jonathan Hunt, the MD and the CEO of Syngene International. Of course, this time around, a little lower than expected as far as the management's expectations were, as far as the growth is concerned, as far as Q4 is concerned. But going forward, especially in the second half, is where the improvement could come in. And of course, the management guiding with high single digits and low double digits kind of a growth expectations for FY25. We'll keep an eye out on all of that, but do stay tuned on to Business Today as we continue to get you such a fantastic earnings conversations with the top managements of the companies that are listed on the exchanges, so that you can take a wiser decision as and when you hold these stocks in your portfolio. Many thanks.